I guess this one here is an exception. The start of the bar was over here. We really need it here, but it happens right there. It does break, but yet it still goes up a fair old amount there. I mean, that's about 1400 pips. Okay, here is a break right here, but it's quite far away. So I wouldn't have taken that trade on. Alright. Oh, here's another one. Here's one right here. There's the start of the histogram. It lines up right there. Boom. Up it goes. I mean, that one was nearly 2,000 pips. Obviously, it goes on for quite a number of days. We're on a daily time frame. But I mean, you can try it on smaller time frames to see if that one works out any better. So let's go maybe down to the 4 hour. Okay, just make sure I've got to scroll off. Alright. Okay. I'm looking for this red signal line to be at the beginning of the histogram, and more so if I'm on the lower time frame. I want them to be as close to that area as possible. Okay, here's a sell trade, and that's right there, and it's below the cloud, so that's also good as well. So we're going to approach this from another way. We've already just shown you how, like, if you're trying to get it focused as close to the histogram as possible. This one, the histogram is actually below the zero line. We also get a signal as well from the iMACD saying it's okay to come down. Plus we get the signal line digging into the histogram to say it's okay to go short. Plus we see the candles below the cloud, so that's also good. Alright, I mean, there is so much data just using the Ichimuko on its own. You could probably just trade the Ichimuko on its own. But if you want to get some extra clarification, it'll be good to use the iMACD as well. And you can also give yourself an idea of when it's going to break out, when the trend is going to change direction, by using my little strategy here, by using my iMACD breakout. Okay, and we can see that this is where it breaks. Now you want to again ask yourself that when this breaks, and using the Ichimuko this time, it's actually helping you make a better informed decision off the iMACD as well, because normally without the Ichimuko on there, you know, for the most part you probably would have gone long at that particular breakout. But you can see this happens appear right underneath the Kumo cloud. Alright, and to try and break through Kumo clouds is quite difficult, and it's normally an area in the market that's quite undecisive. Alright, and you'll see from time to time it might, hit the top part of the cloud, hit the bottom part of the cloud, which is basically a support area, and then go to the top part of the cloud, which is a supporting or floating resistance area. So here we can see some resistance being developed right here, so again we probably would have ignored that. But we can go ahead and move our tool as new peaks are being made and prepare for another long trade. Here we can see it breaks out right here, and then we could have gone long on that. So I mean, it depends on how you want to use the Ichimuko with other indicators as well. Sometimes you might side away from the initial strategy, which was like, waiting for the initial signal line to pierce at the through the histogram on the upside, but as at the very beginning of its development. Alright, I mean, I'm really hoping that this is making sense. I mean, like, here's it's a small example. There's a buy trade opportunity there. This one actually does break it and it stops. So you probably need to take a look why that stopped there. There'll probably be some immediate. Oh, well, there you go. There's our answer right there. Alright, we've got some resistance right there. So that's why that didn't go up any higher. So make sure that when you do check for that formula, and it's at the beginning, make sure there's no immediate support or resistance. Like here is another one. It begins more or less at the beginning because it's at the start of it's around about there, and we're kind of like underneath the cloud, Alright, but once it starts to bite into the cloud, it then, boom, breaks it and goes up, only because it met that condition. Alright, this one was kind of like an exception, so we'd need to have some allowances with that particular strategy. But you can see for the most part it works out quite well. This is on a 4-hour time frame, so you might want to try smaller time frames if you're not really happy with these the larger ones, and just double check to see if they do come through. Let's see if we can find some areas. There's a buy trade opportunity right on the resistance line, so that'll be no good. This is a little bit iffy. There's a bit of resistance there, so you probably have to wait for a breakout on that one, or maybe use another indicator to let you know if it's okay to actually go for that trade right there. Here's one right here, and it actually breaks that area. See, these areas here are actually the equilibrium levels of the Kumo. Alright, so eventually the market needs to come back and retest those at some point. But this one does actually work out quite well, and where that breaks is actually above the Kumo, so you could have gone long on that one and actually target the next equilibrium level. And here is the equilibrium level there, and the market does indeed hit it. It hits it like, you know, or it's a 1 hour bar, so that's about 24 hours it takes to hit it, from about 131 to about 132.49. So it's about 130, 140 pips there that could have been gained. So that's not too bad. Alright, so just use use the force within you, as they say. If you watch too much Star Wars, use the force, Luke. And yeah, use all the areas in front of you, the information in front of you, to make that informed decision, and see how you get on. Alright, so till then, I'll see you in the next video. Bye for now.